We are seeing that upwards pressure on mortgage rates. And I think if you are looking at getting into the first home market or even refixing, it is a really good time to just think about how your borrowing structure.
Kia ora, and welcome to a special guest episode of the New Zealand Property Market Podcast, brought to you by Cotality. I'm Calvin Davidson, Chief Property Economist at Cotality here in New Zealand. Very pleased to be joined again by Satish Ranchod from Westpac as we launch the next edition of our First Home Buyer Report. So Satish is a Senior Economist at Westpac. Very pleased to have him on the podcast again, as I say. How's it going for you at the moment, Satish? Life good? And what are we seeing in the economy?
Great to talk. Yeah, it's a very interesting time out in the economy right now. We're seeing some conditions changing pretty rapidly, and a lot of what we're dealing with here in New Zealand reflects what we're seeing offshore, especially the conflict in the Middle East. It'll be an interesting period for us.
Yeah, for sure. Yeah, that's I suppose it's the hot topic on everyone's minds at the moment, isn't it? Iran, the global conflict, and how that's filtering down to New Zealand in terms of our inflation, interest rates, implications for first home buyers, of course, which is why we're here today. So I wondered if you would just want to take a bit of time to chat about all of that. I guess your views on the global economy, what's happening for interest rates, and particularly the second round inflation effects, first round inflation effects. That's a topic I've been getting a lot of questions about lately. So yeah, go for gold. Give us your view.
Absolutely. I mean, what we are seeing right now are some big impacts coming from offshore here in New Zealand. The main way we're feeling it is through higher prices, especially when we go to fill up the car. Those increases in petrol prices are going to push inflation quite a bit higher. And it's not just directly when we fill up the car. Oil prices have a lot of what are termed indirect effects, with the impacts on other costs of production and transport. That's going to push inflation a lot higher over the next few months. And that's also going to be an downside impact on demand, especially for household spending. Now, for the Reserve Bank, this is a really big challenge because they know they can't offset an increase in oil prices that's already occurred by hiking interest rates sooner. But what they're concerned about is whether, in an environment where we are seeing some really big increases in inflation, whether those increases are going to mean that inflation remains high even longer. Those are the second round impacts that you're talking about. And that's a big challenge for the economy. And I think it does mean that we are going to see upwards pressure on interest rates for the next few months. And that's obviously going to be important for the housing market and for first home buyers.
Yeah, for sure. Yeah, it's such a rock and a hard place for the Reserve Bank, isn't it, in terms of not being able to do much about those first round inflation impacts, but being very vigilant, as they've said, on those second round effects where it flows through to inflation expectations and wage setting behaviour, but also recognising that trade-off in the meantime, that it's probably going to be negative for our GDP growth, and that would tend to drag on inflation a little bit or bring it down. So with spare capacity potentially already existing in the economy anyway. So very tricky sort of balancing act. And, we know that communication and messaging and the financial markets playing off against the Reserve Bank is all a big part of this as well. So yeah, tricky sort of place to be in. I mean, what's your current OCR view? I think you're looking at the first hike in September and a series of rate hikes after that. Is that where you currently sit?
Exactly, and it is a balancing act. The Reserve Bank doesn't want to hike rates too far or too soon and really dent activity, but they know they can't really allow a sustained pickup in inflation because that's really challenging. I mean, balancing those concerns, we think they're probably going to start raising rates in September. That's a little bit earlier than they had previously signalled, but we're now looking at a much stronger inflation outlook, and we think they're probably going to raise rates in a series of measured increases back up to about 3.5%. Now, that's a big change from where we're at now. The OCR is currently 225, so going up to 350s, quite a move. But if I put that in context, it's taking the OCR back around what we think are average levels at a time when inflation is running really hot. So in that sort of sense, it's probably more of a normalization in the face of what are some really challenging pressures. But I think the RBNZ is going to be cautious just about how hard they want to pump the brakes right now, especially given, as you say, we've still got spare capacity and there's going to be challenges for the labour market and a lot of economies. It's a matter of balance. There can be pretty reasonable views on both sides about where that balance lies.
Yeah, and there's always disagreement amongst economists, isn't there? But there's certainly a bit of a split at the moment as to whether we see a cash rate increase in July or whether we see that first one in September. I suppose, it's in some ways people looking from the outside in might think that that's splitting hairs. Really, the point is that we're going to see an official cash rate increase at some point. We're already seeing mortgage rates actually go up in advance of that future monetary policy tightening, as the markets do, always reacting early. So I suppose one of the key messages here for first-time buyers is that we've already seen mortgage rates go up. There's those official cash rate increases to come, whether it's July or September, and there's potentially more mortgage rate increases lying ahead. So not just a consideration for first-time buyers, of course, for anybody who's wanting to take out a mortgage. We're potentially looking at that world where interest rates are a little bit higher. So that's sort of one implication of all of this. I guess in terms of our first-time buyer report, the content that we've put together, again co-branded with Westpac, so we're both bringing some sort of unique data to the party here. From our side, we look at a bunch of different cuts of first-home buyer data based on title transactions information. And so what we've seen for a good couple of years now really is that first-home buyers have been really active, really strong presence in the market, whether that's market share or number of deals. Recently, across the first quarter of the year, they were maintaining 27-28% of activity. Now the number of deals is going up as well, so it's a good story whichever way you cut it. Some parts of the country even stronger than 27-28%. Parts of Wellington up at above 35%, even into the 40%. In the Hutt Valley, sort of upper Hutt, lower Hutt. So in those markets where I guess house prices have fallen a long way, we're seeing first home buyers pretty active. So it's a really strong story. It's easy to get, I guess, a little bit blasé about it or complacent about it, but actually we shouldn't. It's great news that first home buyers are staying strong and they're still finding ways into the market. We're also seeing, I guess, bang for buck, we're calling it, whichever phrase you want to use. It's that they're getting a good quality of house, a good size of house for not necessarily too much more money. So we're still seeing upwards of 75% of first home buyer purchases are standalone housing. Go back sort of 3 or 4 years when affordability was really stretched, that number was down closer to 70%. So I guess as affordability's improved, they've been able to get more house for their money. And yes, they're paying a little bit more this year. The median price they've been paying has gone up from around $700,000 last year to $720,000 so far this year. So a little bit more money, but they're also getting more house and certainly a lot more house than what they were getting sort of 4 or 5 years ago. So it's just whichever way you cut it, it's a pretty good news story. They're also active across the different price spectrums. First home buyers don't necessarily enter at the bottom and sort of work their way up. Some do, but a lot don't. Also active, I guess, across the tiers of the market, whether that's lower value or even upper end properties. First home buyers are purchasing to some degree. So yeah, it's a great news story. I mean, obviously taking advantage of lower house prices, lower interest rates for now. I mean, we're seeing those creep up as we talked about. Definitely a consideration. But they're certainly still lower than where they were sort of 2 or 3 years ago. Tapping into KiwiSaver is another big advantage for first home buyers. And then the LVRs. So those LVR speed limits are pretty huge for first home buyers. We're currently seeing from Reserve Bank numbers about 50-60% of lending to first home buyers in recent months has been at low deposit. So in other words, 5, 6 in every 10 first home buyer loans are done at less than 20% equity. So first home buyers really taking advantage of that. So yeah, those low deposit loans are a big support for first home buyers. One thing that we can obviously get from you guys is those LVR figures, and really, really valuable, really important part of the report. So we've actually seen those sneaking up, haven't we? I wondered if you want to just talk about those numbers a little bit, Satish.
Exactly. I mean, we are seeing, as you say, more first-time buyers are taking advantage of that ability to get into the market with a lower deposit. Combine that with those lower interest costs over the past couple of years, it's made the housing market a lot more accessible. And it's meant that while a lot of established homeowners might be holding off upgrading their home right now, first-home buyers have been able to take advantage of what's a softer sort of market than we've seen for some time and get a better home, as you've been saying. So more advantageous conditions. We are starting to see interest rates creep higher. Still, compared to where we were over the past few years, the market's looking a lot more accessible for a lot of people who are looking to get that first foot on the property ladder.
Yeah, it's awesome. I think from memory, the numbers, if you go back sort of 2 or 3 years, it was something like the average LVR for those first home buyer loans on your books was something like 74-75%. In the last sort of year or two as those speed limits have loosened a bit. I guess as awareness around the speed limits has increased, I guess too. Brokers and more first home buyers' ears, that number's crept up. So I mean, the latest number we had from your stats was it was above 80%, wasn't it, on
Yeah,
average?
just slightly above
So it
80%.
has, yeah. So it's very much consistent with those wider Reserve Bank numbers. So that's a big support for first home buyers. Of course, on the flip side, less deposit means bigger loan. So I suppose that's one factor for first home buyers to keep in mind is that less equity, you'll be taking on more debt, but interest rates are down from a couple of years ago. And I know you ran that awesome table that we've got in the report of the changes in actual cash payments for first home buyers, and it's quite striking, is it, the change in what people are looking at here. It's potentially hundreds of dollars a week or month in terms of cash saved, isn't it?
Yeah, I mean, across a lot of parts of the country, you could be saving between $600 and $700 a month in terms of those mortgage payments. If you're in Auckland, savings could be much larger with a higher purchase price. But I think that's the big trade-off that we're highlighting there is that with a lot of first-time buyers, you are coming in now with a small deposit. You are taking on quite a bit of debt, so it is something for a lot of borrowers to be cautious about, especially in an environment like now where we are seeing that pressure on interest rates starting to build.
Yeah, I suppose the other. I mean, we're talking. This is the whole message here is of a pretty good news story. More first home buyers in the market. Yes, there's some things they're needing to do in terms of perhaps taking out bigger loans at smaller deposit. That's a way in, getting on that ladder sooner. But one thing we showed from your latest figures as well is that first home buyers have actually got a little bit younger. So a bit of a break in the trend, which has been in place for a long time, I think, of first home buyers getting a little bit older as we go through time. Maybe a choice for some people, putting home purchasing on hold. That might be for an OE or building a career, whatever it is. Some people it would have been necessity because of affordability pressures, but maybe just a break in that trend a little bit over the past year or so, with your numbers showing the average age just sneaking down a bit.
Yeah, sneaking down a little bit, especially in areas like Canterbury, where we've seen a stronger economy. But I think the more affordable housing market over the last year or so certainly made it easier for young families to get into the first home. And that's an encouraging trend. But as you say, there's a lot of factors there that have prompted people to delay getting into the market for the first time. Be interesting to see how that picture evolves over the coming year, especially if we're seeing slightly different mix of economic conditions. But hopefully, we'll still see first time buyers being able to get in there.
Yeah, oh no, it's a really good news story. As I said earlier, it's easy to get, I guess, a little bit blasé about these numbers. They've been so strong for so long, but we really shouldn't. I suppose one thing I've been hearing and seeing lately in my presentations and trips around the country is, we've seen investor, and this is a little bit off script, so hopefully you've heard a little bit about this. We have been seeing investors coming into the market to some extent, but there's also challenges out there for investors in terms of flat rents, higher operating costs, political uncertainty. I hear that a lot now. But the election has been pushed down the radar quite substantially lately because of Iran. But I guess for some people, concern about possible capital gains tax, interest deductibility being phased out again. So I suppose what it amounts to in terms of first home buyer activity is that there's probably just a little bit less competition out there than there might have been too. So that's perhaps helping them into that property sooner. Is that something you hear? I mean, do you have any insights around investors? Is it something
Actually,
that you,
we
you
are
pick up within the
hearing that.
bank or in your talk?
We're certainly hearing a lot of those same concerns, but when we look at the lending numbers, what we've actually seen is that it's not just first home buyers who are back in the market, it is investors who have come back as well. But I think compared to what we saw in New Zealand over the past couple of decades, it's quite a different environment. If I think back in the last few decades, investors were getting into the market, they weren't, as focused on yields, more thinking about the big capital gain that they could make. Now, I think investors are conscious of those factors that you just mentioned. We're not seeing the same growth in capital gains. There's concerns about the election and changes in the tax treatment of investor property. And there's a lot of stock on the market. And it means that investors are there in the market, but they're taking a different approach. They're much more focused on what the yield's going to be. And with a lot of stock on the market, they can be a bit choosier than they might have been in the past. And they're only getting in when the numbers make sense as an ongoing asset. So both first-home buyers and smaller investors getting back, it's quite an interesting mix of market conditions, not what we normally would expect. Missing piece, I think, when we're looking at housing really is that upgraded market where people are staying put for a bit longer. If we've got a bit of economic uncertainty, I don't think that's going to change in the near term. but it's going to be a really interesting year ahead for the property market and in that first home buyer space.
Yeah. Oh, absolutely. Yeah, we're seeing that in our figures as well. As the so-called movers, as we refer to them as, are a little bit quieter, and that fits with economic caution, just uncertainty about potentially the jobs market, potentially what's happening with mortgage rates, that sort of thing. So I guess I suppose if we try and wrap it up, I mean, it's been a pretty strong market for first home buyers. They're getting in across the spectrum. They're looking at bigger is not necessarily having to pay more for the privilege, using those low deposit lending allowances. Your LVR numbers showing that it is going up a little bit as people get in with reduced deposit. Just a little bit of good news there in terms of getting in at younger ages. I think in terms of looking ahead, a lot of those supports are probably going to stay in place. Yes, we might see mortgage rates creep up a little bit, and we're already seeing that. So that's going to be a factor for first home buyers. But KiwiSaver is still going to be there. Those LVRs are still going to be there. Lower house prices, it doesn't look like house prices are going anywhere anytime soon. So those factors that have been supporting first home buyers look like they might stay in place. One thing I suppose I've been wondering about is just quickly your labour market outlook. I mean, that's a big factor for first home buyers. It's okay if you can get in with reduced deposit, house prices are lower, but you'd still want to have certainty about your job, wouldn't you? So, I mean, what do you think around the labour market? We're perhaps not looking at a big rise in unemployment, but definitely still something people want to be aware of.
I think that's exactly it. I mean, unemployment's it's not low. It's 5.4% right now. We usually like to see a labour market that's closer to an unemployment rate of about 4.5. So it's still quite a few people who are looking for jobs. And I think what we're hearing from employers right now is that they're not shedding staff, but given the uncertainty around the economic environment, they're not taking on new workers either. And against that backdrop, probably are going to see a little bit of a pickup in unemployment over the coming months. Hopefully not too far. We think it'll probably peak about 5.6. But that adds another layer of uncertainty for people who are looking to get into the property market. Obviously, you want to be certain that your finances are still going to be on pretty stable ground. So certainly another additional sort of headwind to think about there.
Yeah. Nice one. Okay, well, I think we'll probably wrap it up there. Is there any sort of last comments you had? I mean, always a pleasure to have you on the podcast. We're always very happy with the partnership with Westpac and to be able to co-brand the report, bring our data to it, bring your data to it. It's awesome. So, thanks again. And any last comments?
No, it's great to talk, and we think there's a lot of value in sort of looking at those combined data sets. I guess the last thing I just sort of mentioned though is that, like we've been talking about, we are seeing that upwards pressure on mortgage rates, and I think if you are looking at getting into the first home market or even refixing, it is a really good time to just think about how your borrowing is structured. Because if you look at it right now, approach it in the right sort of way, you can potentially save yourself quite a bit longer term. And I think that's a really important factor for people to consider, especially if they're getting into the property market for the first time.
Yeah, for sure. Always good to seek out financial advice, isn't it, on any sort of aspect of any of this. No, that's awesome. Thanks, Satish. Always appreciate your time, and we got there in the end. Had a few tech issues, but we got there in the end. It's always pleased to do that. So, yep, thanks again, and everyone go check out the First Home Buyer Report. I think it's a great report. I would say that, of course. I think there's a lot of really valuable information in there for people. That's it. Thanks, Satish. Hope everyone has enjoyed the podcast. Thank you for listening. Please go out, rate and review it, subscribe. It really helps us to get the message out there. So just leaves for me to say, I'm Calvin, he's Satish. You've been listening to the New Zealand Property Market Podcast. Mā te wā.